Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. In today's discussion, we are addressing a claim that has been circulating in some online spaces, suggesting that there is a coordinated effort to prepare or set the stage for a revaluation of the Vietnamese dong and the Iraqi dinar in a highly visible or sudden manner. This type of statement tends to attract significant attention, especially among currency watchers and retail investors who follow emerging market currencies like the IQD. However, before we interpret or accept such claims, it is important to place them into a structured financial and macroeconomic context. Using what is known from central banking practices, international monetary systems, and verified economic indicators at its core, the idea that any country is publicly or secretly preparing an immediate revaluation of its currency in front of our faces does not align with how modern monetary policy operates. Currency valuation changes, especially for sovereign nations such as Iraq or Vietnam, are not typically executed as sudden public events orchestrated for visibility. Instead, exchange rate adjustments are generally the result of long-term macroeconomic conditions, policy frameworks, inflation control strategies, foreign reserve stability, and in some cases, formal agreements with international financial institutions such as the International Monetary Fund. When we examine Iraq specifically, the Iraqi dinar operates under a managed exchange rate regime. This means the Central Bank of Iraq maintains control over the currency's value relative to the US dollar, within a relatively stable and tightly managed band. The primary objective of this system is not rapid appreciation or revaluation, but rather price stability within the domestic economy. Stability is especially important in Iraq's context, where oil revenue dominates foreign currency inflows, and where fiscal planning relies heavily on predictable exchange rates to manage imports, government salaries, and public spending. A true currency revaluation in the technical sense would involve an official adjustment in the nominal value of the currency, often making it stronger relative to foreign currencies. Such decisions are not made informally or gradually hidden from markets. They require explicit announcements, policy frameworks, and often coordination with international partners. In Iraq's case, any meaningful shift in exchange rate policy would likely be communicated through official channels of the Central Bank of Iraq, alongside clear economic justification. Now, turning to the Vietnamese dong, Vietnam also maintains a managed exchange rate system through its central bank. The State Bank of Vietnam adjusts the dong within controlled parameters, primarily to support export competitiveness and macroeconomic stability. Vietnam's economic model is heavily export-driven, meaning maintaining a relatively stable and competitive currency is a strategic priority. Like Iraq, Vietnam does not operate under a system where sudden large-scale revaluations are a standard policy tool. So when we hear claims that both currencies are simultaneously being prepared for revaluation in a visible or coordinated manner, it is important to recognize that such assertions are not supported by official monetary policy statements, central bank announcements, or verified economic frameworks. Instead, these types of narratives often emerge in informal online communities, where speculation can sometimes be misinterpreted as confirmed financial action. To understand why these rumors persist, we need to explore the psychology and structure of currency speculation communities. The Iraqi dinar in particular has been the subject of long-standing speculation in retail investor circles for many years. This interest is largely driven by the perception that undervalued currencies can experience sudden upward adjustments, leading to significant gains. However, in real-world economics, sustained currency appreciation is typically gradual and tied to measurable improvements in productivity, inflation control, political stability, foreign investment inflows, and central bank credibility. In Iraq's case, there have indeed been significant economic reforms over the past decade. These include efforts to modernize the banking system, strengthen anti-money laundering frameworks, improve foreign reserve management, and enhance fiscal discipline. The Central Bank of Iraq has also taken steps to stabilize inflation and improve confidence in the financial system. These are positive developments, but they do not automatically translate into an imminent currency revaluation event. Instead, they reflect long-term institution building, which is a gradual process. It is also important to clarify the difference between exchange rate stability and currency revaluation. Many misunderstandings arise when people interpret routine monetary policy adjustments or economic reforms as signals of an immediate currency reset. In reality, most central banks prioritize stability because sudden currency revaluation can create inflationary or deflationary shocks, disrupt trade balances, and destabilize domestic pricing systems. For Iraq, the exchange rate of the dinar is also closely tied to oil revenues, which are denominated in US dollars. This means that Iraq's foreign reserves and fiscal stability are directly influenced by global oil prices. While higher oil revenues can strengthen a country's financial position, they do not automatically trigger currency revaluation. Instead, they provide central banks with more tools to maintain stability and manage liquidity. Another important factor to consider is the role of international financial oversight. Countries like Iraq that have undergone periods of economic instability often work closely with institutions such as the International Monetary Fund and the World Bank. These institutions typically encourage gradual reforms, transparency, and stability, rather than abrupt currency adjustments. Any significant revaluation would likely require alignment with broader macroeconomic reforms and external financial assessments. From a market perspective, currency values are influenced by supply and demand dynamics in global foreign exchange markets. Traders, central banks, commercial banks, and institutional investors all participate in determining exchange rates. In such a system, sudden unilateral revaluation, without market signaling or policy groundwork, would be highly unusual and potentially destabilizing. When we evaluate the claim that there is a coordinated visible preparation for revaluation of both the Iraqi dinar and Vietnamese dong, we must also consider the absence of supporting evidence in official economic data. There are no verified announcements from the Central Bank of Iraq or the State Bank of Vietnam indicating such a policy shift. Additionally, there are no credible reports from major financial institutions, international economic organizations, or mainstream financial news outlets confirming such developments. What we do see instead are ongoing economic management strategies focused on stability. Iraq continues to manage inflation, control currency circulation, and support fiscal planning. Vietnam continues to maintain export competitiveness while gradually liberalizing its financial system. Both countries are engaged in long-term economic development, not sudden currency restructuring. For individuals who follow the Iraqi dinar, it is essential to understand that currency speculation carries inherent risks. Exchange rates are influenced by complex global factors that cannot be reliably predicted based on informal claims or online narratives. While it is natural for investors to be interested in potential currency appreciation, it is equally important to base expectations on verified data and official policy statements. In the short term, the Iraqi dinar is likely to remain within its managed exchange rate framework unless there is a formal policy announcement from the Central Bank of Iraq. Short-term fluctuations may occur due to market demand, government spending cycles, or external economic pressures. But these are typically controlled within existing policy mechanisms. In the long term, Iraq's currency stability will depend on continued economic diversification, improved governance, stronger non-oil revenue streams, and sustained institutional reform. These are the fundamental drivers that could eventually influence stronger currency performance over time. However, such outcomes are gradual and cannot be accurately tied to specific speculative timelines. For Vietnam, long-term currency trends will similarly depend on export performance, foreign investment inflows, manufacturing growth, and monetary policy decisions aimed at balancing competitiveness with inflation control. Again, these are structural economic factors rather than sudden revaluation triggers. It is also worth noting that financial misinformation can spread quickly in online environments, especially when it involves high-interest topics such as currency revaluation. This is why it is important to distinguish between verified economic analysis and speculative interpretation. Responsible financial awareness involves checking official central bank statements, reviewing credible economic reports, and understanding the broader macroeconomic context. For viewers following the Iraqi dinar, the most reliable indicators to watch are official exchange rate announcements, central bank policy updates, inflation reports, foreign reserve levels, and fiscal performance data released by the Iraqi government and international financial institutions. These indicators provide a realistic picture of economic direction without relying on speculation. In conclusion, while discussions about currency revaluation often generate excitement, there is currently no verified evidence supporting claims that Iraq or Vietnam are actively preparing for a sudden or coordinated revaluation of their currencies in the manner described. Both countries are instead focused on long-term economic stability and gradual financial reform. As always, it is important to approach such topics with careful analysis and reliance on credible sources rather than unverified claims circulating online. Currency markets are complex, and meaningful changes occur through structured economic processes, not sudden hidden events. Thank you for watching this analysis. Make sure to subscribe for ongoing Iraqi dinar updates that are grounded in factual reporting and responsible financial interpretation. This content is provided strictly for informational and educational purposes only and should not be considered financial advice.